The incredible short squeeze in Jan 2021 kickstarted multiple massive moves in GameStop over the following years. It's been a trader's fantasy, if you were on the right side obviously. With earnings being announced after the market closed on Tuesday 10th of June, will we see GME dramatically rise from the ashes once again? Will the power of momentum and a well-timed purchase see you 5, 10 or even 20 extra risk? All things are possible, but if you were to go off their financials, the company appears to be in a very poor shape. Aside from 2021, GameStop's revenue has been declining year on year since 2018, not to mention that they've been unprofitable for the past 5 years. But for a trader, does that really matter? Where the stock price is concerned, we've seen big swings in both directions, so that already tells us that the stock itself is disconnected from the reality of its fundamentals. And it's for that very reason why, as a swing trader, I focus 90% of my efforts on the technicals of a stock. So the price action, volume, support, resistance, these are things that cannot be hidden. You can see the behavior of buyers and sellers by analyzing the charts. So let's see how GME has been acting lately and how likely the stock is going to rocket to the moon again come earnings day on Tuesday 10th of June. So currently we can see that GME has recovered from its 4-month decline since the start of this year. And what I mean by recovered is that the stock is now in an uptrend with all the major moving averages on top of one another and beginning to slope upwards. For starters, that's a good sign because it's hard for a stock that's in a deep decline to shoot upwards. There's just too much overhead resistance above. Also, GameStop isn't a huge company. It's currently valued at around $13 billion and has a float size of 408 million shares. Not low, but not too high either. And on average, it trades around 12 million shares per day, which is a pretty sizable amount. Technically speaking, I can see all of these numbers as pros for the stock since a surge in the share price will be easier than, say, a massive company with a huge float size. But there are a few things that are concerning to me. Firstly, we had a little surge a couple of weeks ago from the 22nd to the 28th of May, which I believe was due to the company's decision to invest in Bitcoin. Anyway, that rally didn't last long at all, and it sold off shortly after the news was digested. Anytime you see this type of high volatility just before earnings, it's usually not good because these buyers and sellers have already played their hands, and the buyers that bought too late and are holding on to a loss, many of them are itching to sell at the first given opportunity. In terms of price action before earnings, it's best when there's a calm before the storm. That means a long period of consolidation, at least a few weeks, but preferably a few months. The other obvious negative is that there's a strong area of overhead resistance between $34 to $36, dating back nearly 1 year. There's been 4 times where the stock price has reversed from this area, so this entire area is proving to be a tough opponent for GME. It's also worth noting that during the last couple years, if you look at the price action on each day GameStop announced earnings, it's been really underwhelming. Most of the time, the stock sold off, so that doesn't really instill any confidence. Having said all of this, GME isn't the worst type of price action I've seen leading up to earnings. It has a longer and more stable base compared to before, so there's definitely a good opportunity to make money if the stars align. I believe that the best case scenario for the stock will be to gap up over the $36 resistance area on huge volume, but it's also okay if it gaps up just below it as long as buyers manage to push above that area during the day. If any of these scenarios happen, then I'd be looking to play the stock as an EP trade, providing it meets my other setup criteria, of course. I would definitely steer clear of the stock if it has to make a big run up just to approach the resistance area, or worse, it gaps down. And in case you're wondering if I would consider buying before earnings, no, I wouldn't. I never buy stocks before earnings, regardless of how great I believe the company to be, because you never know how bad earnings can be, especially in a company like GameStop. So that's my stock analysis for the rollercoaster stock that is GME. Hopefully earnings can play out like how I mentioned for my best case scenario. And you never know, it could make another massive rally, though I wouldn't keep my hopes too high for it. And maybe you shouldn't too, because a lot of traders and investors get too high of hopium and end up with their emotions all over the place and breaking their own rules. Anyway, remember that GameStop announces earnings after the market closes on Tuesday, 10th of June. So when the market opens the following day, that's when we'll really see how things are going to play out. If you want to see GME go to the moon, just hit the like button and don't forget to subscribe for more swing trading tips. Happy trading.